Thomas, thanks very much for joining us. Looking at the renewable energy side, how big an opportunity is this? I mean, will there be genuine investment opportunities at scale? Is this about private investment, public-private partnerships? How do you see that?
So let's separate the market by itself. If we agree with that, we start with electrons, that means you produce renewable electricity or buy in renewable electricity through a PPA. Then you have to decide what is your off-taker. This is the very first important stuff. Potentially, if your off-taker is, for example, real estate, then they need heat as an energy vector. So you can transform the electricity with a heat pump into heat and sell this kind to a real estate market. This is possible. So here, I'm pretty sure that potentially corporates play a role who are doing that. But also market partners could play a role. For example, district heating. Normally, district heating is in the hands of utilities, or in Germany, we call it smaller Stadtwerke, smaller public-oriented players. But they have to go now the next step for investing into these new technologies, because they have to go out of gas-fired district heating or coal-fired district heating. Here, I do believe that public-private partnerships could play a major role. Let me go now and change the energy vector from we produce not heat, we produce, for example, a molecule like green hydrogen. And important is for me green hydrogen because the starting point is renewables. It's not natural gas. If we use the technology of electrolyzers, producing through electrolysis process green hydrogen, then for sure the off-taker plays a major role. Who is the off-taker and what quality of the energy vector does he need? What kind of a molecule does he need? Does he need ammonia? Does he need hydrogen? Does he need methanol? So from that point of view, there is an opportunity for institutional investors to go along the value chain, upstream, midstream, and downstream, in order to find partners coming from the corporate side, in order to make a typical project financing oriented investments scenario where institutional investors play even a minority share. The off-taker can play a minority share. For example, a utility could play in this kind of an environment a minority share. They all three together get a project-oriented investment scheme in place. If you go now more into the methanol area where you need C molecules additionally, then you go potentially also into the transport area. Then for sure, the oil and gas market players are playing a dominant role. Here, it's clear if they really go in the next 10 years already to green hydrogen and making synthetic fuels, or if they try to prolongate their value chain of using the natural gas and going this way, I can't say. But here I do see some problems for institutional investors to go alongside and in parallel to e-fuels. Where we can play a major role is if we concentrate on hydrogen, and hydrogen plays the energy vector and the commodity selling into the transport and logistics market. Here, I'm pretty sure nobody is really in front because this is an infant technology with regard to the market. Because in the past years, hydrogen was used for mostly ammonia-driven processes and the ammonia fertilizer business and so on, and for chemical processes. But if you now see that we have to really transform whole industries, the industry like the steel industry, the chemical industry, the cement industries, and looking into the transport sector, where in 10 or 20 years, ships have to be completely changed by the motor and by the combustion chamber going in potentially into a fuel cell technology. I do believe here specialized institutional investors with real asset know-how and structuring capabilities and know-how can play a major role in allocating institutional money into these markets, into these projects.
And from KGAL's point of view, Thomas, how important is this focus on particularly impact and energy transition? Do you see this coming from both the infrastructure side of real assets as well as the real estate side?
KGAL has a very good position situation because KGAL started the infrastructure business 15 years back and focusing really predominantly on renewable electricity producing and generation. That means at the moment, KGAL holds more than 60 people already, including technicians. We are having under asset management more than around about 150 solar farms, onshore wind, offshore wind, and hydropower. That means we know the electricity markets based on renewables. We hold 1.5 giga. Additionally, we have a real estate department and we have an aviation department. Both of these departments in the next years and decades have to decarbonize as well. That means we could play a very good entrance into the market of energy transition. And you can see it how KGAL reacted here. Our department was renamed from infrastructure to sustainable infrastructure. And this gives a clear focus on impact financing, ESG-oriented financing, value add, sustainable financing. And this is the focus, this is the clear focus KGAL has for the sustainable infrastructure business, where we combine renewable electricity generation and renewable electricity transformation, power to X technology, energy transition. The main target for us is how can we reduce CO2 emissions further.
Really interesting to catch up, Thomas. It's a fascinating area. Thanks very much for joining us.
Excellent. Thank you, Richard.